What if I told you trading routines were bad? You'd probably call me a hypocrite. After all, in a few episodes ago, we just spoke about the power of having a process, the power of following a routine, and how that can help organize the chaos of your trading. But like almost everything else in life, too much of one thing could actually turn into a negative and hurt you. And we'll talk about that as we follow up in this podcast. But before we get going, I want to introduce you guys to the Trading Coach Podcast. If you guys are brand new, this is a video episode once again, so you can view it on Spotify and YouTube. And of course, you can listen along on your favorite podcasting app. If you're brand new, my name is Akil Stokes. You can go back to episode 000 to hear all about my story. But struggling trader to profitable trader to money manager to trading coach, and now host of the Trading Coach Podcast and trading coach over at tier1trading.com. So today we're going to talk about trading routines and the negative side of them. And this is actually new information to me that I found out over to winter break that I'm very thankful of, because it's going to cause a few changes in how I do things. But I want to first go someplace random, as we typically do here on the Trading Coach Podcast, and talk about something called LD50, right? This was something that I discovered years ago. I think there was like a Ben & Jerry's scandal that happened where they found like some chemical in their ice cream and everyone went crazy, and then they found out that it would take like eating like 150,000 like little 8-ounce things or whatever of Ben & Jerry's for it to be harmful. And I was introduced to something called the LD50, which is something, it's like a scale pretty much that they use to measure how toxic or how bad things are for you. And I remember that I was looking through this scale and found that water was on that list as well. And I think it's a perfect example, because I think we all agree that water is good. We need water to live, but there is something called water poisoning. And if you drink too much water, I think it's like 6 liters in like a 5-hour period or 3-hour period or something like that, you can die or get really, really sick. So when I say that trading routines are bad, it's bad to a certain extent. I believe 100% in having a routine. I believe 100% in having a process to follow. It keeps you organized. But if you do too much of it, there could be a negative side to it. So here's how a routine works. And again, first and foremost, I am in favor of having a routine. I've worked with traders, and many of the new traders I get, they struggle because they don't have a routine. They're everywhere. They're doing everything. There's no consistency, and therefore there's no consistency in the results. So I do think a routine is important, not just for trading, but for business and other aspects of life. But just like delicious ice cream or much needed water for survival, too much of it can have a negative effect. And here's why. Having a routine, eventually, if you follow it, becomes a habit. It typically takes 30 to 45 days to build a habit. Let's just say 90 days, because let's pretend you're breaking an old habit and installing a new one, right? This is why we do all those 90-day challenges, because if you do something consistently for 90 days, it typically becomes a habit. When something becomes a habit, you tend to run on autopilot. So when we talk about the 4 stages of trading, right? Unconscious incompetence, when you don't know what you don't know. You're a baby wandering the world and kind of figuring things out. Then you go to conscious incompetence, where you're well aware that there's something you don't know or something you're doing wrong. Then you go to conscious competence, where you're aware of the right things that you're doing. And then the final stage, the one that we all hope to get to, is unconscious competence. That's when you're running on autopilot. You're doing all the right things. You don't have to think about it. You just do it. It's kind of like driving a car, right? I drive a car to the same place pretty much every day, or at least 5 times a week, and I can do it with my eyes closed. I've never tried it. I don't plan on attempting it. It would probably be a very bad idea, but it's the same route. So pretty much you can say that I'm running on autopilot as I go to this place every single day. When you run on autopilot, you are relaxed, because again, you're not thinking, you're just kind of doing, muscle memory. And when you relax, you're less focused, you pay less attention, you're less perceptive, because again, you don't need to kind of waste your energy on the thing that you're doing on autopilot, and you can save that energy for other things. Going back to the driving example, I did this the other day, where over the winter break, my routine changes a little bit. I'm so used to driving this one specific direction at this one specific time every single day that I kind of just end up there and don't even know how I got there. And that's exactly what happened. I was actually driving to somewhere else. I was supposed to be going somewhere else to a meeting, and I ended up in the parking lot of the place that I'm usually at, and I'm like, how did I get here? I'm like, I'm glad I didn't hit anyone, because I don't actually remember driving there. I just ended up there because I was so so relaxed. I was such on autopilot. My mind was distracted by other things that were happening, and I just ended up in that spot. And you can see how that can be a negative, right? Now imagine doing that in the financial markets, where in the financial markets, trading specifically, right, we have to be very attentive, right? We have to see what the market is doing. We have to analyze trends. We have to look for specific signals. Specific candlesticks can make a difference. And if we're working so much on autopilot, where we come in, we do the same thing, come in and do the same thing, come in and do the same thing, we put ourselves at higher risk of missing those small clues, right? I like to say the market is like this. It's the needle in the haystack type of thing, right? There's lots of junk in the market. The majority of what you see on a price chart is going to be junk. I know the internet makes it seem like every single thing is important and fantastic. Most of it is random. Most of it is junk. Most of it has no purpose on anything that's happening. However, hidden within all that junk are very small clues, and those very small clues are what successful traders use to extract profit. I'm serious, right? If you look at the difference between what a successful trader does and what they're paying attention to, it's a very, very small thing that is the difference between taking a trade or not taking a trade, staying out of a trade versus a kind of a struggling trader hopping in a trade too prematurely. It's very, 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 very tiny. And it takes a massive amount of attention to detail to find those tiny things to make us profit. And then we have to do it repeatedly over and over and over throughout the year in order to be consistently profitable at the end. Now imagine yourself being on autopilot where you're less attentive, you're less perceptive, and you miss those things. This is why many traders struggle over the summer. We like to call the summer the boring time of the market, because the market is slow, right? Sell in May and go away. What happens in the summer is that the markets aren't necessarily less profitable. They're not bad. They're just slow. Meaning that on a regular basis, let's just say, I'm just going to throw out random numbers, right? Let's say during a week, let's say I got 10 trading opportunities during a week. Well, that number may be cut to 3 during the summer. So you're sticking to your routine. You're coming in, you're seeing nothing. You're coming in, you're seeing nothing. You're coming in, you're seeing nothing. And then all of a sudden you're coming in and you're just like, I know I'm not going to see anything. So you're not paying much attention. You're distracted, watching something else, listening to something else, kind of just going through the motions. And before you know it, you missed that small clue that would have given you a profitable trading opportunity, and now you missed it. Same thing we spoke about in a few Trading Coach podcast episodes ago about the trader who created that system that was like 99% correct, but only gave 2 trading opportunities a year. And the biggest thing that we had when we were evaluating it was like, hey, what happens if you miss one? You're kind of screwed. And I got some comments on that podcast saying oh, yeah, I would just make sure to not miss one. Well, think about it. If you have 2 trading opportunities a year and you're coming in every single day looking at the market just to get no trading opportunities, at what point do you become lazy? Are you going to be as attentive on day 1 or on day 300 as you were on day 1? No, because you're expecting to see nothing, and then you're a little bit less perceptive, and boom, that's all it takes, and you miss the opportunity, and boom, your year is done. So it's very important that we pay attention. So having that strict trading routine only puts us in the same sort of risk. Now, the question is, Akil, well, what can we do to kind of have the best of both worlds? Because we don't want to be reckless cowboys, wild cowboys out there. We don't want to be so stuck into our routine that we get on autopilot and start missing opportunities. So where is the middle ground? And this is where I had to do a lot of thinking about myself, because I am a routine-based creature, right? My whole saying is consistent analysis plus consistent execution equals consistent results. Consistency, consistency, consistency. Have a routine, stick to it. The podcast the other day about IPDE and CTS and controlling the chaos, right? Stick to that routine. So I did a lot of self-reflection on, well, how come I'm not often kind of prone to these mistakes? And the answer is, even though I have this routine, I have enough elements worked into this routine to make things slightly different that it kind of smacks you in the back of the head and says, pay attention. So I'll give you an example. Yes, I trade for myself, right? I do my analysis in the beginning of the day. I do it during the afternoon. I do one at night. But in the morning, I also coach traders, right? I coach traders in the form of answering emails, answering messages. I coach traders in the form of live sessions, such as the live trading room. I do videos, I do podcast episodes. I do a lot of things around my trading, which I thought were just supplemental things, but they actually help my trading out, right? And here's how. So when I do my live trading room, one, I'm re-going over most of the analysis that I did by myself in the morning. So I'm getting a second look. It's like reviewing a paper. When you write a paper and it's all great, and then you kind of proofread it and you find the mistakes or you find things you miss. Not only am I doing that, but I'm doing it in front of a small group of traders who have a different set of eyes. So there are questions that come up from new traders. There are observations that come up from seasoned vets, right? There's all types of things that I have to explain differently or look at differently, or can you do this? Can you do that? What about this? What about that? I see this, I see that, right? Even from traders that have different styles than myself. And it's forcing me to kind of get out of my routine and look at different things. And when I look at different things, right, not as much slips through the cracks. Again, we have some seasoned vets in our live room as well that catch things that I miss. Where they'll be like, hey, Akil, what about this trade right here? And I'm like, oh, you know what? I didn't even see that. Thank you, right? So the power of having that community has helped me massively. I've always said that I've become a better trader since I've become a coach, mainly because I consistently have to reinforce the lessons that I teach others, right? I'm consistently reinforcing that with myself because I'm looking for different ways to explain it or different ways to show it or different ways to teach it. So for me, it's like restudying, relearning, rewording, however you want to say it, on a consistent basis, and that's been very helpful. Now, obviously, I know you guys aren't coaches, so you're like, Akil, well, that's great. You're a coach. You have these live rooms. You run these live things. You get that on a regular basis. How can I do that as a trader? Well, this is where community comes in. I should have done a shameless plug. Well, easily, just join www.tier1trading.com. Risk-free trial membership, 14 days on the platform. Try everything out. If you don't like it, no sneaky auto bill. You're just booted out. Goodbye, tier1trading.com. Right, there we go. How bad was that? You can tell I'm bad at this stuff. But what you can do is you can give yourself that community, right? Community doesn't have to be in the form of an actual kind of like, program with traders, although we're awesome, right? Community can be on the internet. You can find a group on Twitter, a group on Blue Sky, a group on Instagram, right? Facebook, whatever it be. You can find a video that you watch on a consistent basis, right? Many of the live room members do this as well. They look at my live room or my analysis as being a chance to double check their analysis, where they've already done their analysis and then they're either watching the live room live or watching the recording and kind of like saying, okay, what did he look at? What did I look at? Am I on the same page? What did I miss? I do a weekly video on YouTube called The Trading Edge, where you can do the same thing, where you do your analysis at the weekend and be like, hey, what's Akil looking at? Am I seeing the same things, right? So you can manufacture this community even if you're not a part of a community. Now, I would advise staying away from trading forums. A lot of them are very bad, or at least doing your due diligence on them first, because you want to be in a supportive situation. You don't want to put yourself in a situation where people are just like sharing ideas and my idea is better than yours and yours sucks because of this and that and you can't trade that way. That's not going to help you at all. You want to be in an environment where people are open to being like, hey, maybe you look at different pairs or different markets, or maybe you trade different styles or different systems, but we can all be right as long as we're sticking to our core principles. So that's one thing you can do. Another thing that you can do is make physical changes to your routine as well. And this is something that I've done, not purposely, just because I just do them, and now I learned that I'm doing them for a good reason. And physical changes could be different, right? So I'll give you a few examples. Years ago, I moved out of my home office to an office in the city, right? So packed up all my stuff, trucks and trucks and trucks full of computer monitors, because that's what traders do. Moved it into an office building in the city. And man, it was like a adrenaline boost to my trading, and I wasn't doing anything different on the charts. There was nothing really different in my daily routine aside from waking up a little bit earlier because I had to commute. But I just felt more alive. I felt more inspired, and it was simply because of the change in atmosphere. Now, I don't expect you guys to go and just change your offices or something like that, but you can kind of manufacture that in different ways. You can change your monitor display where you have a flat 3 or a flat 2 or stack them. You can change your office, right? I used to be that way over there, right? You see that little clear desk, if you can see it over there? That's where my trading setup used to be. So I changed from here to over here. You can change the colors on your screen. I do this on a regular basis as well. Again, I just thought it was because I get bored easily, so I changed the background from black to white to blue to, whatever it may be. But all of those small things, again, are like slaps in the back of the head that kind of wake you up and just change things enough that it keeps you inspired, it keeps you motivated, it keeps you from, getting stuck in that same routine, but not so much that it changes kind of the bigger picture. Going back to the driving example, it's like, hey, I'm driving on the same route, but all of a sudden there's construction, so there's a guy I have to slow down or stop thing, and I have to kind of stop, right? I'm still taking the same route, but there's that little bit of a different twist that kind of wakes me up and says, okay, yeah, let me pay attention. And that can be massive. Another thing that helps this is kind of within analysis would be top-down analysis as well, right? Top-down analysis is the process of working on or working from different time frames, right? So in my personal trading, I go from a daily to a 4-hour to an hourly, right? And although I'm kind of doing similar analysis on each, just having that different perspective, switching the charts up, makes it a little bit different. Something I just thought about right now is maybe I should do this in my own trading. I'll give this a try. Is switching the routine in which I look at pairs, right? For you guys that have joined me in the live room, you guys see the list on the right-hand side of my chart. I have the same trading portfolio. I look at the same pairs and do analysis in the same exact order every single day. It is euro dollar, it is pound dollar, it is euro yen, it is pound yen, it is dollar yen, it is dollar Canada, it is Aussie dollar, it is New Zealand dollar, it is Aussie Canada, right? Same exact order, right? Well, what if I switched it up? What if I switched the order and did pound dollar first? I'd probably self-destruct and blow up because I'm a creature of habit. But that could be something that just kind of, you're still doing the same analysis the same way on the same portfolio of pairs, but you're doing it in a slightly different way, which again is just a little bit of a wake up. So when it comes to routines, we want to have routines. They're very important. We need to be consistent. When we are consistent, we are the most productive, we are the most efficient. We stop things from slipping through the cracks. We organize the chaos. But understand that there is such a thing as being too stuck into that routine. And what we want to do is we want to make small modifications outside the core of that routine that allow us to stay sharp or really stop us from getting stuck in that super autopilot mode where we're less perceptive and we allow things to kind of pass us without us knowing. Ooh, one more thing I would add too is another thing that's very helpful that I'm thinking now about all the stuff I go through, right? Taking breaks is key, right? Now, in general, you don't want to be a slave to your chart. If you guys have ever done back testing, what happens a lot, oh man, back testing is a perfect example. Should have had this earlier. So what happens in back testing is this. If you are a marathon back tester, meaning that you're someone that's like, I'm locking in 7 hours on the chart, not moving. You've got like coffee over here, you got a snack over here, a little pea cup, like you're fully dedicated. What happens is as you back test, right, you get kind of stuck on autopilot, right? Your eyes get all weird and glazy as you're going through year after year after year after year after year. And what happens is the longer you go through it, the less details you see and you start missing opportunities, right? I can't tell you how many traders I've spoken to where, they've had mistakes in their back testing. I'm just like, hey, go back and test that same period of time over again and let me know what you get. And they're like, man, Akil, I found like 20 more opportunities. I'm like, yeah, because you were on hour 7 of a backtesting marathon and you just like started missing things because you were kind of just so stuck on autopilot, right? So when it comes to backtesting, right, you want to take breaks. I say, do it a month at a time, a year at a time, 10 trades at a time, 25 minutes at a time, whatever your deal is, but make sure you take breaks in between. Trading is the same way, right? Especially you day traders who are super active. Make sure you take breaks. There's a reason in our live trading room we take a break every 45 minutes because really after 30 minutes, that's when the brain starts to kind of, right? So it's good to take that 13-minute break, come back and look at the charts fresh. Right? There's a reason why Monday is my main day for analysis, right? I try to get away from the charts, right, during the weekend, unless there's like something that needs to be managed on the open. But being away, think about it like this, right? So I'm on the charts Monday, Tuesday, Wednesday, Thursday, Friday, 5 straight days, right? Getting away from the charts for that Saturday, for that Sunday, 48 hours away or even more, and then coming back Monday, you're fresh, you're excited. It's no different than from like going on vacation. You've been away from the markets for a week and you get back. It's a new energy, a new fire to be like, ooh, what happened? Things have moved, right? We're in that period right now where we just came off a big holiday break and we're starting up again. It's like, okay, let's see what the markets have done since mid-December, right? You just get more, nothing's changing in your normal routine, but you're more excited again to do it. So that's something else that you can do is build in those daily breaks, build in those weekly breaks, just something enough to make you come back and really fall in love with the markets again. So let me know what you think. These ideas are fresh in my head. Is there anything that comes to mind with you, or is there anything that you would recommend doing? Leave them in the comment section below. I would love to hear about it. And of course, if you're interested in joining a community, check us out, www.tier1trading.com, 14-day risk-free trial membership. Again, there's no auto bill or anything like that. You're just kicked out after your 14 days, but it's a great community of traders, obviously great coaches, and a program that was recognized in Forbes magazine as being the leading innovators in trading education. So hope you enjoyed the podcast. Do me a favor before you leave. Take a second to leave a rating and a review. It is a massive help. Also, make the Trading Coach podcast a part of your routine in a positive way, of course, whether you're commuting to work, whether you're backtesting, whether it's in the background, whether you're actively trading or during a break. Many traders have said that this has been a very helpful aspect of their trading. So let's make it part of yours as well. All right, until next time, plan your trade, trade your plan. Take care.